The think about rates and where they go longer term and where they stay and where they get sticky has risen, right? The expectations, we're not talking shorter. And we know the shorter end, everybody expects it to be higher, but that's important about where you think they will go and what the bets that are being made within the market 10 years out, right?
So what does that do to the housing market?
I don't know. I mean, it's definitely going to slow down, but you know, I was listening to Surveillance this morning and I can't remember whether it was Barry Ritholtz or somebody else making the point, millennials are buying homes. Like they're having kids.
A friend of mine just bought a house yesterday.
So ultimately,
I said, with these interest rates,
you need it to live. You know what I mean? And you're going to make decisions based on what you need to live by. So anyway, got to kind of think about that a little bit.
Let's get to world and national news. Nancy Lyons is in our 99.1 studio. Hey, Nance.
Thanks, Tim. Well, after a 3-year battle, the House Ways and Means Committee will be receiving former President Trump's tax returns. The Supreme Court cleared the way for that to happen today, issuing an order that came without any explanation or public dissent. The pressure is on for a rail strike to be averted before the holidays. The largest railway labor union has rejected a deal that was brokered back in September, even though other unions have signed on.
Industry groups are urging Congress to step in. Policy analyst Isaac Boltanski of the financial firm BTIG explained what it can do in a Bloomberg interview.
There's a law called the Railway Labor Act, and that lets Congress come in to either impose a resolution based on what the president's emergency board submitted this past summer, or to kick the can down the road to require operations for, say, 3 or 6 months.
Boltanski said the Democratic lame duck Congress might choose to act rather than buck the issue to the next Republican House, which might be less friendly to organized labor. In Washington, Irv Chapman, Bloomberg Radio.
A spike in COVID-19 cases in China is raising concerns about the supply chain. Bloomberg's Enda Curran is in Hong Kong.
I think there is a feeling now among China watchers that China is heading into a very difficult few weeks. It's going to be probably the biggest test of COVID-0 since the pandemic began.
Again, Bloomberg's Enda Curran. At the World Cup, Saudi Arabia provided the first real stunner in the competition, beating Argentina 2-1. Mexico and Poland played to a scoreless draw. So did Denmark and Tunisia. France, the defending World Cup champs, has a 2-1 lead over Australia. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, live in our Bloomberg Interactive Broker studio, streaming on YouTube as well as on Bloomberg Quick Take. We do want to remind everybody we are going to be talking with Kathy Wood in just about 40 minutes time, so a lot to get to with her when it comes to crypto and Tesla and Twitter. In the meantime, though, a name that's certainly been on our radar for a while is Carvana.
Yeah, the used car dealer, the online used car dealer, the share price has unwinded at a fever pitch.
It's down
unwound.
97%.
97%.
This year.
And it still could go, you know, obviously it can keep moving lower.
Yeah.
The company's shares spiraling down 97%. Analysts' average price targets struggle to keep pace despite coming down sharply, Carol.
Yeah, I always love watching when something either takes off on Wall Street or falls, you know, comes undone, and how the Wall Street and the analyst community, how they think about their ratings and their rankings. And what this does is, with the company's shares spiraling down a staggering, as we said, 97% this year, analysts' average price targets struggled to keep pace despite coming down sharply. That changed this month, and in just the past week alone, at least 3 analysts downgraded the stock, slashed their targets, saying the combination of weakening economic conditions and the car dealer's heavy debt load could lead to more dire outcomes.
Carol, this is a company that last year had a market cap that exceeded $60 billion.
Oh my gosh.
Fast forward to, you know, close to the end of 2022, we're hovering around $1.22 billion.
Can I just tell you, there's still 9 buys, 16 holds, and 3 sells, according to Bloomberg data.
Okay, so it's kind of a double whammy here.
What?
That's hitting Carvana. One is that used car prices have come down, so that hits the company. Demand for them have come down. And then there's also, in the higher interest rate environment that we're in now, consumers are less likely to go out and make a big purchase,
right,
like an automobile.
Right, there's a couple things hitting it. Right now, if I look at the Bloomberg data, 12-month price target, I guess that's the average one, is like $19.83. Stock right now at $6.77.
Okay,
that's like a more than a doubling, right?
So they're optimistic.
Yeah, that's the takeaway, Tim. All right, you're listening and watching Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Best level of the day right now on the S&P. We've got 43 minutes to go ahead of the closing bell, so let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. Stocks with the bid from a start today, with the Dow currently up 366 points. S&P's gained 47, while NASDAQ is higher by 116. The U.S. 10-year yield at 3.76%. Gold is little changed. Oil is trading higher, and Bitcoin is up by 3.3%. Among the main 11 S&P sectors, all were trading in the green, led by gains in energy and the materials. And leaders to the upside in the Dow, Home Depot and Walgreens, while Disney fell 1.7% and led to the downside. After earnings, Dollar Tree fell 8%, while Best Buy gained 11%. And in deal news, Sky News reported that Manchester United owners are preparing to explore a sale. And in other news, Dow Jones reported that Sequoia apologized to its limited partners for the FTX investment. Wrapping things up, Autodesk, HP Inc., Nordstrom, and VMware all report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, Bill Maloney, we thank you. And to hear live breaking news over at your Bloomberg, type Squawk SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've been keeping a watch on shares of Beyond Meat because we've seen some selling pressure again today. In fact, at their lows, down as much as 9% or just shy of that. Still down about 5% as we speak. And the stock, if I take a look at what it's doing, it is down 80%, Tim, so far in 2022.
We got Dina Shanker with us. She's consumer reporter for Bloomberg News. She covers Beyond Meat and other faux meat companies for Bloomberg News. We wanted to get her on the program because she had a deep dive that came out yesterday morning into dirty conditions at a key plant. It's a facility in Pennsylvania, and it illustrates the alt meat makers' ongoing difficulties. Dina Shanker joins us now via Zoom from New York City. Dina, according to these reports, what was found at that plant in Pennsylvania?
Hi, thank you guys so much for having me on. Basically, what we saw from photos and internal documents was a plant that was just not operating safely or following basic health and safety measures. We saw a lot of mold, both on ingredient containers and on the walls.
I mean, these pictures, Dina, are pretty shocking that are included in the piece.
Yeah, I mean, they are, because I don't think that any of us want to see a food plant that looks like this. There are things in these pictures that many of us might not even notice as bad practice. But for example, we have a picture that shows a trolley car turned over into a large funnel type of shape of machine. And we can look at that and we can say that doesn't look right to me. We can't necessarily say why or exactly what's wrong with it, but the experts actually not only pointed out that, which they said is dangerous for the people involved. They said it's contaminated, or there's room for contamination because you never want something with wheels on the floor to be that close to your food production surfaces. But if you look at that
makes
picture,
sense to me.
Yeah, right. But if you look at that picture, you'll also see to the left, there's a bucket on a machine, and that was actually we don't even mention this in the story, but the experts also noticed that bucket. It's cut off in the photo, and they said that bucket shouldn't be on a machine, and there's a hammer on a machine. They said those things shouldn't be on those machines.
It's
so they're supposed to be
messy. And we got just for everybody who's watching on YouTube or Bloomberg Quick Take, you can actually see what Dina is talking about. Dina, I got to say mold, right? Like, I've dealt with it in my basement. Like, it starts to freak you out, and you just take care of it because it can be dangerous. But mold growth takes a while, right? So it's not like, oops, we just missed it. It just happened. This stuff takes a while to develop.
That's right. And we see the mold on ingredient containers, but we also see it on the walls. Or on one photo on a wall, and that's exactly right. It doesn't mean that this one day, at this one moment in time, somebody happened to capture a bad situation. It means that that situation has been like that for a little while in order for that to happen.
Dina, where did these photos come from?
from a former employee who worked in the plant and was really concerned about the conditions in it.
And what did Beyond Meat tell you in response to inquiries related to these photos and what it showed at allegedly happening at the plant?
They said that the Pennsylvania Department of Agriculture found no instances of non-conformance with regulations during their inspections. They said that they go above and beyond industry and regulatory standards with their food safety protocol. They mentioned audits, which give them very high ratings. They did not comment specifically on the documents or the conditions we described to them from the photos.
One thing that emerged to me in terms of reading your piece was sort of this pattern of, I don't want to ascribe intent to this, but I was pretty surprised to see that basic paperwork and fees hadn't been paid to the state, like a $30 fee, I recall.
Yeah, the $35 registration fee. That's right.
What does that illustrate to you?
That they're not following basic good practices. But to me, I wonder who's in charge and where are they, and why is this such a pervasive problem in this plant? I mean, I have a lot more photos that we didn't include, so it goes way beyond, four photographs.
And you point out, for anybody who's listening at this point, internal reports also show that some contaminated products made it through to consumers. So ultimately, did a lot get out to consumers? What do we know? And I am curious, when it comes to Beyond Meat facilities, this Pennsylvania one, how important is it in terms of overall production?
So in terms of what reached consumers, what we know is that from the documents that were shared, that some wood in two separate A&W burgers at two different restaurants was found by consumers, and that a metal link was found in a bag of Dunkin' sausage patties. And there was recently a recall from Costco in Canada because of wood found in the products. That's what we have documents of from reporting this story. In terms of the role this plant plays in the company, it's actually a very important one because the company doesn't have a lot of its own real estate in the U.S. They have two sister sites in Columbia, Missouri, and this plant. And the plan had been for this plant to be upgraded and expanded. The company had been planning on doubling the size of this plant. As recently as this summer, there were expectations that would happen. So this was certainly this is an important location for this company. Most of its manufacturing in the U.S. is done by co-manufacturers. They make their raw material, sort of like their secret sauce kind of ingredients at their Columbia facilities.
Dina Shanker, consumer reporter at Bloomberg News. Check out more. Just head to Bloomberg.com. Thank you, Dina. This is Bloomberg.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody. Checking out shares of Tesla. They're just up about 1% in today's session, something we might get into with Kathy Wood. I hope we have enough time to do it all, but certainly she has been an advocate for a long time with this company. See what she has to say.
We're getting a good chunk of time with her
Yes.
in the 4 o'clock hour, so looking forward to that.
All right, in the meantime, we're going to talk with our Ed Ludlow about Tesla and China and their policy. But in the meantime, let's get another check on our trading day with Charlie Pellet.
Hi, thank you very much, Carol Master and Tim. Also, we have got stocks holding at session highs right now. 28 minutes to go ahead of the close, right to the numbers with the S&P now up by 49 points. That's a gain of 1.3%. Dow Industrials up 384, higher by 1.1%. NASDAQ is up 130 points right now. That is a gain of 1.2%. 10-year yield 3.75%. The 2-year 4.51%. Spot gold up $1 the ounce now. Still a little changed, up less than 1/10% to 17.39. And West Texas Intermediate crude up 1.3%, 81.11 for a barrel of WTI. Cannot ignore Bitcoin up 3.3% right now at 16,150. Investors today recalibrating their expectations in response to Fed officials indicating that they will continue to raise rates but are open to slowing their tempo. Nadia Lovell is senior strategist at UBS Financial Services, and on Bloomberg Television and Radio this morning she told us consumers are holding up.
We're seeing the spending in retail earning this week and also in terms of retail sales. But, the consumer spending is shifting. It continues to shift away from goods and towards services. I think what's given consumer confidence and spread to spend is the labor market. The unemployment rate still remains pretty low at 3.7%. We're seeing, more layoffs in tech. And if that becomes more widespread, then we think that the consumer will be more concerned about job security and probably tighten their belt as we get into 2023.
And a lot of double-digit moves after earnings. Case in point, Abercrombie and Fitch up now by 20.8%. Best Buy up by 12.2%. American Eagle Outfitters up 16.9%. Dick's Sporting Goods up by 10%. So we've got a big gain today for a lot of the retail names. After the bell, we'll be hearing from VMware, Autodesk, HP Inc., and Nordstrom. We will be all over those numbers as they break. So again, recapping here, S&P up 50, up 1.3%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stenovic, live in our Bloomberg Interactive Brokers studio here at Bloomberg headquarters. Tesla shares, by the way, hitting a 52-week low today. They're down, Tim, more than 50% year to date.
Yeah, it's not just a one-year low. Nope. They're at multi-year lows. For this, we turn to Ed Ludlow. He's West Coast correspondent for Bloomberg News. He joins us from our Bloomberg 960 studio in San Francisco for another edition of Plugged In. It's Bloomberg Plugged In, your weekly look at EVs. It's brought to you by Audi. Don't let someone else drive off in the Audi model you've always wanted. Visit your local tri-state Audi dealer to get behind the wheel of yours today, or visit AudiOffers.com for more information. Ed, good to have you with us this afternoon. When I think of Tesla, I really am just thinking about this connection to Elon Musk and Twitter, because if you go back to October 28th, late October, when we saw the deal for Twitter close, Tesla shares have lost more than a quarter of their value since then. Is the concerns that investors are just worried that his attention is elsewhere?
Yes and no. I mean, the concerns are wider now in the sense there is some key man risk that Musk might be too distracted, focusing too much on Twitter and not enough time onto Tesla, right? There is frustration out there that that's the case, but Tesla is a big global company. There's a lot of concern about COVID-0, both in terms of how that's hampering demand, and there's evidence, right, from our stories on the Bloomberg terminal that Tesla recognizes that impact to demand, particularly in China, but also what any lockdowns that may happen or may not happen, as the case may be, mean for the Shanghai plant, which is just so critical to Tesla's footprint.
How important is China to the Tesla story longer term, Ed?
Incredibly important, because China is the world's biggest automotive market, biggest EV market. The difference there is, the three of us kind of sit here every week and we're like, what's the latest EV, right, from GM and Ford? Because we're here in North America. In China, different ball game. There are so many more players, right? domestic players who offer a wider range of models. And Tesla has done very well there historically. But now, while demand is kind of slipping in that nation due to the macro picture, consumers have more choice. And now what we see is Tesla recognizing, wow, we've got to do something to kind of respond to that, you know, be a mainstay in that Chinese market.
So, Ed, we're interviewing Kathy Wood a little bit later in the program.
Yeah.
And she's
Oh,
a
good.
long-held, you know, bull on Tesla. But she's also been buying shares of GM, which is interesting. What's the innovation story at GM right now?
Yeah, I mean, I've discussed this point with her that, you know, it's not winner takes all in the EV market. The global market for cars is way too big. Tesla's never going to conquer it 100%. They might be the market incumbent now, but penetration of EVs in North America, for example, is around 5%. There's a lot of room for people to go there. And, you know, GM is talking a big game. Their commitment to investing in electric figure is in the tens of billions of dollars, right? They are bullish about their technology, the Ultium battery platform, which they think is going to be profitable by 2025, as we scooped Mary Barra on the other day. So, you know, I think you ask her, but I think Kathy Wood recognizes that there are room for other players in the future, and GM is a good candidate.
I don't know how, you know, it's been an interesting couple of weeks when it comes to Elon Musk and Tesla and Twitter, right? The trifecta. But how do you know, what is it that we need to think about that maybe some of the things, I know that there was some writing about what Elon did at Tesla specifically, he's doing with Twitter, kind of, you got to be committed, you know, nose to the grindstone.
Hardcore, extremely hardcore is the term, Carol.
Like, how do you think about it? Like, this is just Elon being Elon, folks, so don't you remember what he did at Tesla kind of thing?
I think, you know, like a lot of people are worried that Elon is not paying attention at Tesla. You know, there's two sides to this story. There's the Twitter side and the Tesla side. At Twitter, you know, he's going to his playbook. Tesla and SpaceX, which we also lead as CEO, right, went through incredible periods of duress before that they were the giants they are now. And Twitter is Elon's latest project, trying to fix a company that's under duress. You know, on the Tesla side, those that are saying, forget about Elon for a minute, you know, Tesla, there are other people there. It's a ginormous company, but there are key figures like CFO Zach Kirkhorn, Drew Baglino, who's the SVP for Powertrain, a lot of experienced, you know, senior people who basically Elon leaves the company to run day to day to. He still talks about being the kind of chief engineer, getting to grips with the technology himself at Tesla.
Right.
But he doesn't see himself as like a traditional CEO that's kind of cracking the whip and keeping everyone running day to day.
We're bouncing around, got about 15 seconds here. So bottom line, the revamped Chinese marketing strategy, we don't need to be worried about Tesla. They've got this.
Tesla is doing marketing, and it doesn't do traditional marketing. We're talking TV ads, promotions in that Chinese market. It's kind of feeling the heat. That's what we're seeing.
All right, good stuff, and a good check-in on a name that we often talk about, and with good reason. Ed Ludlow, thank you so much. West Coast correspondent, Bloomberg News from our 960 studio in San Francisco. Ed, thank you.
Well, let's get to world and national news now. For that, we go to our 99.1 studio in Washington, D.C., where we find Nancy Lyons. Hey, Nance.
Thanks, Tim. The U.S. Supreme Court is clearing the way for a House committee to get 6 years of Donald Trump's tax returns, rejecting a last-ditch effort by the former president to block the IRS from turning them over. A high court order, which came without explanation or any public dissents, lifted a temporary hold that Chief Justice John Roberts had imposed as the justices weighed Trump's bid for a longer delay. Lawmakers said they needed the returns to consider possible legislation on presidential compliance with tax laws. Well, several powerful industry groups are urging Congress to step in and prevent a rail strike ahead of the holiday season. That's if railway unions do not agree to a labor pact. Negotiations are continuing this afternoon. Brad Edelman is a labor attorney with the Brotherhood of Maintenance of Way employees. He says workers are seeking a better benefits package.
Most railroad workers have no paid sick leave, and the experience of the pandemic obviously highlighted that as a major shortcoming of existing collective bargaining agreements.
That's labor attorney Brad Edelman. A prolonged rail strike could cause shortages and higher prices for goods. A Massachusetts man has been charged with reckless homicide after crashing his SUV through the front window of an Apple store in Massachusetts yesterday. One person was killed, nearly 20 others injured. At the World Cup, Saudi Arabia scored a major upset today, beating Lionel Messi's Argentina team 2-1. Both of Saudi Arabia's goals came in the second half. Mexico and Poland ended at a scoreless draw. So did Denmark and Tunisia. France leads Australia now 4-1. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much, Nancy Lyons. All right, folks, we're thinking about the upcoming holidays, and if you're wondering, Tim, where to shop for a gift,
look no further than New York City's Fifth Avenue, and here's why.
Just bring bags of gold, though.
If you want to spend money, it's a good place to go. Get this, Carol.
Yeah.
Fifth Avenue here in Manhattan has been named the world's most expensive shopping area.
This doesn't surprise me, though.
No.
Okay.
So much of it is marketing in these stores.
I guess so, right? So space on Upper Fifth Avenue. So we're talking about between 49th and 60th Street. So we're talking also around by Rock Center, the Christmas trees over there. Garners some of the highest average rents, according to a report by Cushman and Wakefield. The area's resilience during the pandemic downturn, coupled with the strength of the U.S. dollar, helped the quarter bounce to the top of a list of shopping districts across the world from its second-level spot in a ranking done before COVID hit. It's also a place where a lot of tourists end up hanging out.
Place where tourists hang out, and of course these high rents are commanded by landlords who end up having high-end shops in them. And that's what I mean when I say it's about marketing, because so many people end up going to this part of the city when they come and visit New York, even if they're not necessarily going to buy something from one of these stores.
All right, so in the U.S., rents for retailers are now 25% above pre-pandemic levels. The average price for a spot on Upper Fifth Avenue in New York climbed 14% from before COVID hit. This is according to that report.
Okay, so let's talk about other areas of the world. Hong Kong's Tsim Sha Tsui district was the second most expensive spot, followed by Milan's Via Montepellione, London's New Bond Street, and the Avenue des Champs-Élysées in Paris.
Yeah, the Asia-Pacific region and the Europe, Middle East, and Africa area have yet to fully bounce back from the downturn. Hong Kong's area that you just mentioned is seeing rents 41% below pre-pandemic levels.
It kind of makes sense if you're in an area where, foot traffic isn't back to what it was before the pandemic because of certain restrictions. Certainly Hong Kong is not like, what we see in mainland China.
I also do wonder what the impact is of China really taking back Hong Kong, right, and having much more say over it, if that has also dampened in terms of tourism and maybe certainly what it means for retail and shopping in that area. All right, you are listening to Bloomberg Business Week. Carol Massar, Tim Stanovic. Let's get back to World.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Charlie Pellet. We've got stocks holding at session highs. 13 minutes to go ahead of the closing bell, with the S&P now up 52. That is a gain of 1.3%. Investors today are recalibrating their expectations in response to the Federal Reserve, indicating that they will be raising rates, but are open to slowing their tempo. Also, a batch of upbeat earnings helping lift sentiment. The Dow up 393 now, up by 1.2%. NASDAQ up 140, up by 1.3%. 10-year yield 3.76%, with the 2-year yielding 4.51%. Spot gold little changed, up 86 cents the ounce to $17.38. West Texas Intermediate crude up 1.4%, $81.17 a barrel. Bitcoin right now up 3.3%, 16,143. So again, recapping, S&P just above 4,000 at 4,001, up 1.3%. The Dow narrowing its loss, its year-to-date loss, to 6.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. American children face a viral triple threat this year. The combined impact of COVID-19, the flu, and RSV, a virus that can be very dangerous for infants and young children, has overwhelmed hospitals. To prevent another blow to the healthcare system, officials need a better way to anticipate and respond to these threats. The CDC could start by developing a risk threshold based on deaths and hospitalizations for all respiratory viruses combined. Crossing a certain threshold would trigger policy responses, such as freeing up beds or sending a surge of medical staff. In the longer term, the Biden administration should develop a national strategy to draw more workers into the healthcare field. Better data, coupled with a more resilient workforce, should help health systems meet this challenge. This editorial was written by the Bloomberg editorial board. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session. We're seeing some buying once again into the close. I feel like a broken record because I feel like over the last week or so, we've seen that a few times. We're now pretty much at our best levels of this day, Tim.
Interestingly enough, on the S&P 500 over the last 5 days, Carol, we're up only 0.2%.
Yeah, so right.
So, it's been a little
good
volatile.
perspective, yeah.
Let's get into it with Asha Mehta, founder and chief investment officer at Global Delta Capital. Also the author of Power of Capital, an adventure capitalist journey to a sustainable future, joining us via Zoom this afternoon. Asha, how are you?
Hi, I'm delighted to be with you.
It's good to have you with us this afternoon. I just want to start with the markets and then get a little bit into your book, because this is some really interesting stuff. How would you describe where we are right now in terms of rate hikes, a tightening cycle, and when we're going to be on the other side of these?
This is a tough question to begin with, and I think we just heard in some of the former commentary about the rate cycle continuing, perhaps at a slower pace. What it speaks to is inflation that hasn't been experienced in a generation here in the developed markets. Thanks for the nice intro. I manage a strategy that focuses on emerging markets. So when I look at where we are with the markets more broadly at the moment, I'm seeing investors looking around for growth and thinking about how are we going to capture growth like we've seen over the last decade and the years to come, with inflation being where it is, with the rates rising as they are and continuing ahead. Investors who are looking for growth are starting to think beyond the single country, single sector concentrated approach that's been successful over the last decade. And again, I'm as an emerging markets investor, I'm starting to feel quite optimistic about the opportunity ahead for markets outside of the U.S.
Astrid, you also think about emerging markets or the intersection of emerging markets and fintech, and I just think about and you think about innovation disruption, something we're going to talk a lot about with Kathy Wood in just about 10-15 minutes time. But what's interesting too, and I think with the backdrop of FTX and Sam Bankman-Fried, like how are you thinking about that and the impact that might have as kind of an investing class going forward?
I think it's one of the most critical themes. And thanks for introducing my book, Power of Capital. It's an adventure capitalist journey in which I introduce 3 mega themes that I see reshaping the globe. One of them is what we just talked about, the new global paradigm, the rise of the emerging markets and this new sort of growth class. Another one is around sustainable investing. But a critical theme is the one you just mentioned, technology. The reality is that the vast majority of the world's population today carries a supercomputer in their pockets. And in the emerging markets in particular, I see necessity as the mother of invention, an asset class that has had less access to liquidity. Today has a very strong young demographic, which we all know is very quick to pick up technology. Some of the most exciting and scalable technologies across the globe are coming from Africa, where mobile money was born, China, where clean technology is hitting scale, and India, where some of the strongest technology universities in the world reside. So couldn't agree more. Technology is a critical mega theme, and there's lots of opportunity, not just in the sector, but in the context of vertical integration. It transforms every sector from finance to consumer to retail.
Well, help concentrate it a little bit or focus it a little bit for our audience. And I know you can't necessarily give picks, but can you get more specific with what you're bullish on and why?
Yeah, so I just alluded to some of it, and I'll spend a couple more moments on it. Mobile money, fintech, which you just brought up, I think is one of those critical themes that's reshaping the opportunity across developed markets. We're all experiencing the rise of mobile money, the ability to pay.
Are you separating this from crypto?
I do separate it from crypto, but I do look at digital currencies as another important innovation that, again, it has the opportunity to disrupt the opportunities ahead in terms of investing. I think of digital money in terms of new sectors, the ability to invest in small caps that are, creating new forms of currency. But even in large cap financials, within emerging markets in particular, but with digital money, they're able to access a much larger demographic. And again, that creates opportunity for revenue expansion across all aspects of the cap spectrum, and opportunity for earnings expansion, because the reality is technology, not particularly capital intensive.
Asha, I do want to just, did you have any exposure to the collapse of FTX in particular, or any of the fallout?
Thankfully, crypto is an area that I have limited exposure. I invested, like I said, in emerging markets specifically, in equities within that.
Okay, good to understand that. Okay, so can you talk about different regions? I mean, I know you mentioned India. I want to specifically focus on China, though, because we've been talking a lot in the last few days about the reopening in China versus, or I should say, lack thereof, as the nation continues to at least talk about tens of thousands of cases that it's seen and report the first deaths over the weekend that we've seen in months in certain cities. What is your interpretation of what's happening in China? Is it investable right now?
China is a large market, probably not surprising to your sophisticated audience, but often surprising to investors to recognize that China has the largest equity market in the world by liquidity. Well known that China is a geopolitical powerhouse and economically really one of the superpowers today. Yes, absolutely. With COVID, the China growth story became a little bit more blemished. But we're starting to see the opportunity for China, even with just a few comments that came from President Xi earlier this month. The Chinese market is up more than 20% year to date, with a lot of volatility embedded within that, to your point on rising COVID numbers. I, perhaps like you, am very bullish that when China does reopen, it has the opportunity not only to allow the Chinese markets to bounce back even stronger, but to have downstream effects where the rest of Asia is likely to benefit from a China reopening theme, and the globe broadly, again, with inflation being where it is, to have China's supply chain back on, that can have a massive deflationary effect that the whole globe is hungry for.
Right.
But I do expect a bumpy ride, as we've seen in November.
I was going to say, many would argue that it will continue to be a bumpy ride, as it feels like sometimes policies coming out of China are one thing one day and another the following day. Asha, thank you so much. Asha Mehta, founder, chief investment officer of Global Delta Capital. Her book, Power of Capital, an adventure capitalist journey to a sustainable future. All right, folks, just a few minutes left in today's trading session. We're pretty much trading near our highs of the day. It is time to head over to our TV colleagues to talk about the trade today specifically and what's impacting markets. We're going to count you down to the closing bell. Beyond the Bell, our simulcast live on Bloomberg Radio, TV, YouTube, and on Bloomberg Quick Take.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Scarlett Fu, we're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with Carol Masser and Tim Stenevik. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube and Quick Take. A broad-based rally here. Carol Masser, as the S&P 500 sets up for its first close at 4,000 in a couple of months.
Pretty amazing, right? And to see also, once again, I know we've talked about lighter volume today ahead of the holiday, but we've seen some buying once again into the close. As for outperformance, those retailers, I know Abercrombie & Fitch among them and a few other names coming in with results that certainly gave some enthusiasm to the investor community. So S&P 500, the super composite retailing industry index, up about 1.4%.
I'm not trying to rain on the parade here, but I was pretty surprised to see that on the S&P 500 over the last 5 days, even though this is the first time we've hit 4,000 or closed above 4,000 in months, Romaine, it's still up only 0.3% over the last 5 days.
Yeah,
speaks to the volatility.
Yeah, it speaks to the volatility and it speaks to the tightness of the trading range. And we should point out that when you go back to that September 12th number and where we went from September 12th to the low of the year-to-date low, which was, of course, on October 12th, that was a 13% decline, and we haven't recouped necessarily all of that just yet. So interesting moves here. Scarlett, and we've been talking here about how tight the trading ranges have been.
I mean, even as we kind of break out a little bit here with a gain of better than 1%, for the last 7 trading days, the S&P 500 has not closed with a 1% move in either direction. And the last time it did was, of course, on the back of that October CPI report, which sparked that massive rally, almost a relief rally, like, oh, in fact, inflation has peaked. Let's move on.
Well, it'll be interesting, too, because, of course, we get a couple of really interesting economic data reports, including that jobs data in about a week's time, and then that CPI number that comes the day before the Fed meeting. The Fed meeting, of course, concluding on December 14th. Here's the closing numbers here. The S&P 500 is going to close at 4,000, but just by the skin of its teeth, though, 4,003.64. That's up about 54 points or about 1.4% on the day. The Dow Jones Industrial Average higher by about 1%, closing above 34,000, and the NASDAQ Composite higher by 1.4%, closing right around 11,174. And the Russell 2000, similar gains, at least on a percentage basis, higher by 1.2% on the day.
And Romaine, you like to give the big numbers in terms of how they all closed on this Tuesday. Just digging a little bit deeper into the S&P 500. We'll get into the industry group shortly, but 448 names in the S&P 500 higher. So you saw some fairly broad-based buying in today's session. 51 lower, 4 unchanged. Scarlett.
Yeah, you can back that up with a look at the sector performance here. This is 24 industry groups in the S&P 500, and 23 groups are higher. The only group that's basically unchanged is communications and professional services. Basically little change. Everything else is green across the board. Energy has led the way all day today as oil prices rise. Saudi Arabia clarifying that, if anything, they might look at production cuts to keep oil prices elevated. And chip companies up by 3.4% on the day. Should mention retailers as well as we wait for Nordstrom numbers to come out. Retailers are a mixed bag, but for now, up by 1.3% as a group.
Yeah, and Scarlett, I actually have a few retailers that are among the names, the gainers that I want to highlight today. First of all, Best Buy, quite a rally, up almost 13% here at the the close, top in the S&P 500, soaring the most since 2020 after modestly improving its profit forecast, also signaling its recent sales slump is starting to ease, so lifting this year's forecast for operating income and comp sales. Also want to mention Burlington Stores, again, another one that really stood out in today's session. It was up about 20% after the company's CEO said trends at the off-price retailer have improved from mid-October through November, called the outlook for 2023 next year very positive. And then I did want to mention the semiconductor space where we really saw some outperformance today. Analog devices is one of the big reasons why, top in the NASDAQ 100, up almost 6% in today's session, giving a bullish forecast for the current period. So we're talking about the first quarter and saying that demand in their two markets that they really play into, industrial equipment and cars, are both holding up better than the broader chip industry. Fourth quarter results, by the way, also a beat. So again, this one was up about 6%.
And I'll just add one to your board, Manchester United, those shares closing at up 15%, biggest one-day gain on that stock trading here in the U.S.
All right, I'm not going to talk about sports because I already embarrassed myself talking about the World Cup a little earlier today. Let's go to decliners. Carol, you got the gainers. I'll look at the decliners. I did want to check in on shares of Disney a day after posting its biggest single-day gain in years after Bob Iger came back to replace Bob Chapek. A little bit of selling today as investors continue to digest the news and understand what the reorg ends up meaning. Down 1.4% today, underperforming the wider markets. A tale of two different types of earnings reports today when it came to retailers. Dollar Tree finished the day down by 7.8%. Executives there said the company expects annual earnings per share to come in at the lower end of its previously given range due to higher costs leading to margin pressure. And then the medical tech company Medtronic down 5.3%. It missed revenue expectations for the second quarter. The company also cutting its adjusted EPS forecast for the full year. Macro pressures, including Forex and supply chain issues, continue to hurt the company's results.
All right, yields lower here on the day. The two-year yield, though, only down by about 2 basis points. The bigger drops came in the belly of the curve and the long end of the curve, 6-7 basis points on your 5, 10, 20, and 30-year. You put it all together, you got a 2-10s curve right now. Down in the whole, negative 77, holding right now at the lowest level, Scarlett, that we've seen going back to 1981.
Yeah, I'm looking at it, and it's been contracting where the yield curve has been more inverted for what, 5, 6, 7 days now. 7 straight days, 9 if you want to include the fact that it didn't change on Friday, November 11th. So it's interesting here. What does that signal? Is it a stronger signal of recession?
I think so. I mean, we've been talking a lot about this, particularly when you look at that 10-year yield and the idea here that it's going to drop a little bit faster and below where the Fed ends up on that terminal rate. And I think that's what a lot of people are concerned about right now.
You guys saw that new note out from Goldman that said the 10-year yield is going to be above 4% through 2024.
Right.
Interesting to hear that, given that we've only seen the 10-year yield up, 22 days so far this year, above 4%. So that, portends a rocky 2023 and 2024.
Yeah, a lot to parse here, definitely when it comes to the macro. Also going to talk the micro. I'm going to say goodbye, at least for now, to Jim Stenovic and Carol Master, wrapping up our cross-platform coverage of the market close right here on Bloomberg Television and Radio as well as on YouTube.
So is this...
All right, and we do our thanks to both Romaine and Scarlett in terms of talking about the market close. We've got a great guest. I want to get right to her. Delighted to have back with us to talk about so many of the things that really have preoccupied us over the last couple of weeks. Kathy Wood is back with us. She's the founder, CEO, and Chief Investment Officer of ARK Invest, joining us via Zoom. Kathy, it is so great to have you here with Tim and myself, live on radio, TV, across all the Bloomberg platforms. How are you?
Doing very well. It's been a very challenging few, I should say 20 months, but, we're looking at our portfolios right now, and we are back to where we were in terms of calling them deep value portfolios if you give us a 5-year investment time horizon. I mean, we're seeing incredible values for the kinds of growth, that our portfolios are going to deliver.
You know where I want to go. I got to talk to you about the crypto space. It's a world you know really well. We think about the FTX collapse, the bankruptcy proceedings today, the coming undone of Sam Bankman-Fried. You have been buying into some of the different names in the crypto space: Coinbase, Grayscale, Bitcoin Trust. Why should investors trust crypto? Why do you trust crypto at this point?
Yes, if you look at the blockchains, let's use the Bitcoin blockchain and Ethereum. what you'll find is they have the infrastructure, the technology has not skipped a beat throughout this entire crisis. In fact, the hash rate, Bitcoin's hash rate is at an all-time high, and that is a real indication of the security of the network. On Ethereum, we're seeing the total value staked at 24 billion. That is an all-time high. So we think the infrastructure is working beautifully. As far as Coinbase, this is an onshore regulated company and wanting to help shape regulations. Brian Armstrong, the CEO, and Alicia, CFO, have been leaning into what's going on right now and saying, okay, regulators, we need more clarity in order to protect investors. Those who wanted to get involved with certain types of crypto were forced offshore, and look at what's happened. So I think that Coinbase is going to come out here looking very, very strong. It just lost a very big competitor in FTX.
Well, what is the market missing, though? Because, you know, that could be one narrative, Kathy, but at the same time, we haven't exactly seen shares of Coinbase rally since FTX's collapse. Do you think to you that represents potentially broader concern about just people's interest in crypto following FTX's collapse?
No, I think it's more fear. I think many people say, we don't know what we don't know. So what we do is we step back, put a little perspective into the situation here. And what do we have? So the entire crypto asset ecosystem is an $800 billion ecosystem. Apple is 3 times larger in terms of market cap. So that's some perspective. Many people are saying, well, okay, is this another Lehman? Could this be, could we see the domino effect here? I've just given you one reason why. The banking system back in 08, 09, trillions and trillions of dollars, and it was the global banking system. Right now, we have, it seems, from FTX, $5 to $10 billion in creditors as FTX has filed bankruptcy. They will be making claims. If you look at Lehman, that was $1.2 trillion in claims. So again, just trying to put perspective, this is fraud. This is Madoff. Madoff was $64 billion in claims. Again, FTX, 5 to 10 billion. Now, I know that crypto assets are, they attract a lot of attention. This is, the 3 revolutions we talk about all the time, a new monetary system in terms of the first global, private, meaning not government controlled, digital, rules-based monetary system. That's Bitcoin, a very big idea. DeFi is a very big idea. And while that has been thrown into question in terms of, shifting from one exchange to another, we've had a lot of shifting around. But I think DeFi, in terms of taking the middlemen out of financial services and making the ecosystem much more transparent with much less counterparty risk, is going to take off. It will continue to move forward, we believe.
Kathy, I think one of the things we're trying to figure out is how long that we think the industry will be feeling the ramifications of FTX. I mean, one thing we've learned, right, with SBF and FTX is what we didn't know. So how long do you think this goes on? Because you obviously have faith in it. You've been buying into it, and you think this is a good entry point at this point, whether it's Grayscale, whether it's Coinbase. But how long do you think we continue to feel the effect, and do you think there's more contagion to be felt?
Well, we always look for the whale in a situation like this, and if there was a whale out there, it was FTX and Sam Bankman-Fried, king of the hill. So I think we found the whale, and I'm sure there's going to be more fallout, but we see how big the whale is. And yes, a lot of people have lost a lot of money around the crypto asset ecosystem losing value here. But if we're right on the underlying technology and the underlying roles that Bitcoin and Ether, Ethereum are going to play in this new world, then I think we're going to recover pretty quickly.
You mentioned that FTX was a, quote, fraud. It's no Lehman or no Madoff. Give us an understanding of what your interactions...
It is more like Madoff.
More like Madoff.
Yeah. Oh, my gosh.
So,
yes,
well, give us an understanding of what your interactions were with Sam Bankman-Fried before this fallout. And have you spoken to him? Because I know you were at Crypto Bahamas, along with many other people, earlier this year, the FTX SALT conference.
Yes, I had a Zoom, my team and I had a Zoom with Sam before that conference. I think they wanted to have us represented at the conference. And so I did give a presentation there, or I was on a panel. But other than that one phone call, just to set up, I have never talked to him. And, you know, he, by the end of the phone call, seemed to be distracted by whatever else he was doing. So that was my one exposure to him. And, you know, I think the thing that is shocking is how many people were very close to him. And one would have presumed, looked at all of the documents and got a sense of the books. The fact that so many people were completely fooled is quite shocking. You know, I think he had this aura around him or something that caused people to ask fewer questions than might otherwise have been the case. It's very hard to understand.
Do you worry at all about, as you buy into Grayscale, Kathy, you know, the whole world of the digital currency group and Barry Silbert's company? I mean, the various connections that kind of go back to FTX. Are you at all worried about a liquidation or anything?
Well, we know that the Grayscale investment trusts are the most valuable part of that company right now. And they are they're cash cows. They're revenue generating. We do not think, we think they're going to try and hold on to that, if nothing else. We're looking at a 41% discount of this trust relative to Bitcoin today. And so we actually think there's a lot of upside. Now, one of the things that we know that Grayscale and Michael Sonnenschein at Grayscale wanted was to convert this trust into an ETF.
Right.
I think what's happened with the fallout here might increase the probability that a Bitcoin ETF will be approved. I'm not saying immediately, but we know that, and even the newest SEC commissioner, Jaime Lizarraga, I think is his name, has come out and said, we need as regulators to focus on decentralization and transparency. What is the most decentralized and transparent crypto asset in the world? It is Bitcoin. And yet retail investors do not have easy access through a liquid asset like an ETF, which honestly, I don't understand, given that they approved a Bitcoin futures fund. So, you know, I think it might increase the odds. We shall see.
Well, and some have been wondering whether or not you're playing the arbitrage with GBTC right now. You know, is it that because of the trust deep discount at this point? Is that the thinking for you to kind of be moving more money into this name?
Well, it is one of the few securities. We have to own securities in ETFs. So it is one of the few securities we can buy. And yes, it's at a very big discount. So it is more attractive. Bitcoin, if they were to even liquidate it, you know, we've got such a big discount relative to Bitcoin that, again, we don't think they're going to. This is the most valuable property. I think they're going to hang on to it. And I think over time the discount will close. Don't know if it's because of a conversion to a Bitcoin ETF. I'm sure the regulators will take a very close look at DCG and the Grayscale Bitcoin Investment Trust, but we do know this is a grantor trust, highly regulated, highly regulated. I mean, we had to do our homework on it. And we know that all of the Bitcoin behind GBTC is in cold storage at Coinbase, and Coinbase has confirmed this. We feel quite comfortable with it here.
Kathy, we've talked Coinbase, we've talked GBTC. Are there any other opportunities in crypto that you see right now in the wake of FTX's collapse as prices have been beaten up?
Well, again, for our ETFs, we, as you mentioned, own Coinbase. We also own Square. And it is interesting that Jack Dorsey has chosen the most transparent, most decentralized crypto asset to center Block's crypto exposure to. And I realize he's trying to, from a developer community point of view, leave them on their own. But we do think Bitcoin, and you can see through the behavior of the infrastructure, hasn't skipped a beat, not one beat, more secure than it was yesterday, the day before, and the day before. So I have a feeling this is going to elevate Bitcoin in the eyes of not only the crypto world, but the investment world at large. And I have a feeling it's going to have more running room through the rest of the world. I think this is the way that this is Block's go-to-market to get into the rest of the world. And we think they're going to be very successful.
So then I'm assuming, Kathy, that you're going to hold to your Bitcoin forecast for, what is it, $1 million per coin by 2030. That still feels good to you?
Yes, and you can, sometimes you need to battle test. You need to go through crises to see who the real, to see the survivors, first of all, but really to battle test the infrastructure and the thesis. And again, we think Bitcoin is coming out of this smelling like a rose because of what I have mentioned previously. And I do think the one thing that will be delayed is perhaps institutions stepping back and just saying, okay, do we really understand this? And once they actually do the homework and see what's happened here, I think they might be more comfortable moving into Bitcoin and perhaps Ether as a first stop. Because they'll understand it more.
You mentioned Jack Dorsey. I want to switch gears if I can. And I was thinking about Twitter and Tesla. Like I said, there's so many things that are going on in our world right now that I feel like you are the person to comment on. How do you make sense of Elon Musk, someone you've talked to, you've been an investor in Tesla for a long time. Are you comfortable with his actions around Twitter of firing people, hiring them back, the verified check, talking about people paying for it and then taking that back? Do you feel comfortable with this name? And I should put out that, right, you own private shares of Twitter and have talked about wanting to own more.
Yes. Yes, we do. We owned Twitter for quite a while, and we sold it into the rumors that Elon was going to buy it because we knew there would be a lot of controversy around that. So it moved into the 60s. I think it got to 70, and we sold there and have been watching from the sidelines. But if you look at that model longer run, it has not delivered on the promise. And I think opening up the algorithms, which we think he will do, and taking away the kind of human-driven censorship and allowing the transparency of the algorithms that they do put out there, allowing people to question them, I think is going to be very healthy. If you look at the daily average users, I think the various metrics that you can count daily, they have been going up dramatically. So, I know a lot of people who basically decided to quit Twitter because they didn't like the kind of censorship and so forth that was going on. So I actually like what he's doing.
It seems interestingly enough, though, that a lot of brands don't like what he's doing, Kathy, and we've seen
Right.
some prominent companies pull back or at least pause advertising on the
There's a
platform.
Connection lost.
Of course, I mean that makes sense. If you don't necessarily want to support the guy who owns Tesla if you're making competitive
easy out.
competitive
Yeah.
vehicles to Tesla, but bigger brands that are worried about brand safety. And I'm wondering, I don't know what you're seeing in your Twitter timeline, but I'm seeing ads that are not relevant to me anymore and not relevant to me now, and aren't actually ads that are for companies. They're more like ads for influencers these days. It doesn't seem like it's necessarily moving in the direction of increasing revenue from an advertorial perspective right now.
Well, I do think that this is not just an advertising vehicle. In fact, that probably might diminish quite significantly in terms of its importance longer run. You'll remember that Elon started his entrepreneurial pursuits with a precursor to PayPal. So he, a very long time ago, had this idea of a digital wallet, a super app like WhatsApp in mind. And of course, took a big detour into another passion of his. We know he knows a lot about this world. And I think if anyone in the U.S. can do this, I think he can. I think he'll surround himself by the right business leaders. He's not going to do this himself. If you look at Tesla, he's not, if you look at, many people say, aren't you worried about Tesla? No, we're not, because of our work on electric vehicles. They are grabbing a disproportionate share, and will continue to do so, of a market that we think by 2027 will account for 85 to 95% of all cars sold in the world. So that's on automatic pilot. He's now working on autonomous, which we think is going to work. In fact, I just had the pleasure of riding in a cruise car in San Francisco, an autonomous car.
A GM.
Proof of concept, a GM. Just wanted to check it out. And I have to tell you, I love the ride. And I know autonomous is possible because Cruise and Waymo are doing it. And we think Tesla is going to do it in a much bigger way. So that's Tesla. But onto Twitter, it really needed to be shaken up. And I
Do you
think
think he can make it be a great business and very profitable? And if so, how?
I do. Think about the amount of data that Twitter has, and it's proprietary data, and think about the combination of that and artificial intelligence. Remember, he has AI expertise and experts. I know he brought in some of his engineers, and they are going to, I think, surprise and delight, heading for a super app kind of product. And, by our estimates, and you'll find this in our big ideas, I think it was 2021, the value of each customer in a digital wallet should be, and when I say that, the market cap associated, should be in the 20,000 plus range. Because it's not just for financial services, it'll ultimately be for commerce. And AI is the glue that's going to pull this all together. And the data that they have, the data is the new oil. You've heard that. This is absolutely true in the case of Twitter.
Well, Kathy, I mean, the currency, Twitter as a currency, has worked really well for you. You've got 1.5 million followers on the platform. A lot of people see what you tweet. We saw eulogies last week being written for Twitter. It didn't end up dying, as many people thought it would. But what would happen if Twitter went away, and are you concerned about that?
It's been, and yes, we speak from experience. This is an extremely productive social network for us. It is our most productive. And, it truly is the global public town square. I can write an open letter to the Fed and put it out over Twitter. Now, do I think the Fed's going to listen to me? No, I don't. But that they may listen, the Fed board members may listen to someone who might think that I have something to say, which is simply a question. Wait a minute, How can you be unanimous, 75 basis points at a time? How can you be unanimous when there is so much conflicting data out there, including an inverted yield curve now at 75 basis points? That's crazy. I think we're going to look back in history and say, what were they thinking? Unanimous? Commodity prices are falling. You've got excess inventories all over the place. We're seeing massive discounting. I think we're going to see deflation, and then they'll make a move in the opposite direction. But we need, we need a steadier hand than that. So,
wait, Kathy, when do you? Because you've argued this and you've put this out there in terms of Fed policy, in terms of deflation. When do you think it will come?
I think we're seeing it. I think if you look at a lot of commodity prices, not only are they down 30 to some of them 80% from their peaks, they're down on a year-over-year basis. In fact, oil itself is almost down on a year-over-year basis now. The big pushbacks on this call we get are wages and rents. We're seeing rent inflation reverse quite suddenly and dramatically. So what I think we will look back in history and say, this inflation shock was the function of a supply shock caused by COVID, supply chain problems afterwards, and even more problems after Russia's invasion of Ukraine. If I can just take 1 second, I would like to give an analogy to the late 19 teens. We were in the middle of the massive, most massive innovation the history of the world had seen: telephone, electricity, and automobile, all at the same time. But we had World War I and we had the Spanish flu. Sound familiar? Now, that was much worse than what we've gone through. We've gone through nothing like that. But there were massive supply chain problems back then. And inflation peaked at 24%, right? In June of 1920. And by June of 1921, it was minus 15%. So I think that our 8 to 10% inflation, which is where it was at the peak, is going to turn around, and we're going to see some very big surprises on the inflation front. And you know who agrees with us? The bond market. Look at what the bond market is doing now. The long bond yield, 380, 75% inverted. That's telling us that the bond market is saying recession and or big surprises on the low side of inflation expectations. And it's probably both.
Kathy, unfortunately, we only have a couple of minutes left here. One thing we did want to squeeze in, we've been talking about it in the newsroom, that AllianceBernstein is getting ready to launch actively managed disruptor ETFs. And from what I understand, you pitched them, years ago. How does that make you feel? And, to see a firm that you worked at kind of doing a very similar thing or looking to do something similar?
Yes, well, AllianceBernstein, I believe, got the first fully active, fully transparent ETF in, I think it was early, it got it was approved in early 2013. So that's when I put my hand up and said, I'll do that. And there was a belief that ETFs were not safe, or there were a lot of arguments against it. Probably the biggest one was mutual funds, which are much more profitable. I would say the economics there are higher than ETFs. How does it make me feel? The more the merrier. I think this is a fantastic wrapper for the end consumer. It's fully liquid, unlike mutual funds. You have to wait till the end of the day. Transparent, fully transparent. That's what investors want. It is more tax effective, much more tax effective. We're seeing mutual funds that are down 30% this year, but they're slapping their investors with 35% in capital tax gains. And then finally, it's more cost effective because all of what you see is what you get with these fees. There aren't a bunch of hidden fees. So it's a great wrapper for the end consumer. I highly recommend it. And we're happy that they are seeing the light now.
All right. Well, good to get you to weigh in on that and just so much more. Kathy, we always appreciate your time. Be well. Have a great Thanksgiving. Kathy Wood, CEO, CIO, and of course, founder of ARK Invest, joining us there via Zoom. All right, you are listening and watching Bloomberg Business Week on radio, TV, YouTube, and on Quick Take. Right now, we want to get a check on the markets. Back to Charlie Pellet. Hey,
Hi,
Charlie.
thank you very much. Kathy Wood making news moments ago. She spoke to us right here on Bloomberg Business Week. Kathy Wood of the ARK Innovation Fund says she is standing by Elon Musk and the changes he is making at Twitter.
If you look at the daily average users, I think the various metrics that you can count daily, they have been going up dramatically. So, you know, I know a lot of people who basically decided to quit Twitter because they didn't like the kind of censorship and so forth that was going on. So I actually like what he's doing.
HP is eliminating as many as 6,000 jobs over the next 3 years amid declining demand for PCs that has cut into profits. HP Inc. reporting earnings moments ago. The Dow, the S&P, and NASDAQ all advanced today, closing at or near session highs. S&P up 53, a gain there of 1.4%. The Dow up 397, higher by 1.2%. NASDAQ up 150, a gain of 1.4%. 10-year yield 3.75%. The 2-year 4.51%. Spot gold up 0.1%, $17.40 the ounce, while West Texas Intermediate crude oil today up 1.5%, $81.23 a barrel. Bitcoin up by 3% to 16,104. So again, recapping, the Dow, the S&P, and NASDAQ all rallied today, closing at or near session highs. S&P up 1.4%, 10-year yield 3.75%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week on this Tuesday. Well, in the wink of an eye, you can go from CEO to former CEO, as was the case, as you know, of now former Walt Disney CEO Bob Chapek, as the Disney board went from right leader at the right time to wrong leader for today in just about 5 months.
We've got Chris Palmieri with us. He's entertainment editor for Bloomberg News. He joins us via Zoom from Los Angeles. Chris, what happened here? Because just a couple of months ago, I believe it was the Code Conference in L.A., Bob Iger was asked specifically by Kara Swisher if he was going to come back as CEO, and he pretty much he ruled it out. I won't even say he pretty much ruled it out. He absolutely ruled it out. What happened in such a short time?
Well, I mean, yeah, this happened very quickly. In fact, we're told that he got the call just on Friday to come back. You know, he'd been making a lot of plans. He's been joining a partner in a venture capital firm. He'd been making personal investments. He was in talks with other people, you know, about joining companies as recently as last week. You know, this was a hard one to read because Bob Chapek was in trouble, no doubt. He was very unpopular internally, and the stock had taken a beating this year. But the board had renewed his contract just in June and gave him a vote of confidence at the time. You know, in retrospect, that was probably a bad move on the board's part because, you know, the drumbeat against him just continued, and stock did even worse. And a couple weeks ago, the earnings release was just terrible. And at that point, you know, everyone just sort of said it's time to go.
But Chris, Bob Chapek was not new to Disney. Like, he was handpicked. No. He was handpicked by Bob Iger.
Yes, he was. And that was, of course, after Iger had renewed his contract and delayed his retirement at least 4 times. So a lot of the people who were talent that people talked about for years as being possible successors had left the company by that time. Chapek was sort of not on anybody's top list as a pick for CEO, other than perhaps Bob Iger's. And their relationship went sour pretty quickly after Iger gave him the nod. It seems that, you know, Iger probably wanted a little bit more appreciation and involvement in decision making, and Chapek really wanted to run his own show and chafed at the, you know, sort of the second guessing he was getting. So, you know, he made a lot of missteps. You know, obviously the Florida legislation that he initially did not oppose made him very unpopular internally. He did a big management reorganization that took away a lot of decision-making authority from the TV network heads and the film studio heads and all the people who were used to making decisions on what film and TV shows to make. And ad sales and distribution deals and all that stuff. And he was unpopular with a lot of people who were just regular Disney fans. He had done a lot at the theme parks to raise prices, introduced this new line cutting system that in effect was another large price hike. He required reservations. That was really troubling to a lot of season pass holders who found they couldn't get in even though they had passes. So Chapek just managed to annoy a lot of people.
So if Bob Iger had said no, would Chapek still be there?
Yeah, because I mean, one of the things from this is that they really didn't have a bench that they could rely on. The fact that they went back to the old guy says that there was nobody internally that they could pick.
Don't you find it, Chris? Don't you find it interesting? Do you remember years ago when I was out doing some stuff on Disney? You were great as a resource, and I was talking to Disney. And remember, it was like Tom Staggs and was it Rizzullo, the CFO? They switched jobs because those two were considered to be in the running. Like there was a bench.
there was a bake-off, and Staggs appeared to one. They elevated him to chief operating officer. Rizzullo left, in the midst of that. Ann Sweeney, another highly regarded executive who ran the TV business, left. Then, even more recently, you have Kevin Mayer, who did this, amazing launch of his strategy chief. That launched the Disney Plus product, 10 million subscribers in the first day, if you remember. And then he got passed over in favor of Chapek.
And then he left.
Then he left immediately. Yeah. And so there's been a lot of talent that might have been in the right place to take over that just left, given the process.
Okay, here we are, day 2 of Bob Iger's new reign at Disney.
Chop, chop. 2 years only, the contract.
Right. So he's got a lot of work to do. We saw a memo yesterday that he sent out. We saw executives leave and also a reorganization already happening. What are the changes that we can expect in the near future and over the next 2 years?
Well, right away you saw him start to unravel some of the decision making that Chapek had made. For example, that reorganization that created this central distribution arm to make all the business decisions about the film and TV shows. Kareem Daniel, the executive who headed that, was out the door day one. And there's a lot of unresolved things that I imagine Iger will tackle pretty quickly. For example, they have a deal to buy 1/3 of Hulu from Comcast. A lot of people have been asking questions about that. And so I imagine that will get executed at some point. They have this situation in Florida with this Reedy Creek Improvement District that it got taken away from them by the Florida legislature this year. They're probably going to have to negotiate some sort of future for that business. I imagine Iger will be involved in that. And he's got to stem the losses in the streaming business of $1.5 billion last quarter. It's just a staggering amount. So he's got to figure out a way to rationalize that.
Chris, I was thinking about it coming in when we knew we were going to cover this today. Just got about 35 seconds here. What contributes the most profitability to Disney today? And where's the fastest growth? Real quickly.
Well, the most profits still come from the traditional TV business, which people want to spin off. About $8 billion last year in profits from ESPN, ABC, and all that. Yeah. Second business is the parks, about $8 billion profit business, and the business that's losing money is streaming. Lost about $4 billion last year. So
what's growing the fastest in terms of profits? Is it streaming? Growth in terms of revenue?
in terms of revenue, for sure. That's the fastest growing business, and that, let's face it, is the future of TV.
Interesting times we are living in. Chris Palmieri, you're all over it. Entertainment editor at Bloomberg News via Zoom in LA.
Let's get to world and national news. We go from LA to our 99.1 studio in Washington, D.C., where we find Nancy Lyons. Hey, Nance.
Thanks, Tim. The Supreme Court has cleared the way for the handover of Donald Trump's tax returns.
The court rejected a last-ditch effort by the former president to block the IRS from turning over the documents. The House Ways and Means Committee had been racing the calendar to obtain the records before Republicans assumed control of the House in January. The committee said it needs the returns to consider potential legislation on presidential compliance with tax rules. Trump's lawyers argued the panel lacked a legitimate legislative purpose and was seeking to make the documents public for political reasons. Jill Schneider, Bloomberg Radio.
Also happening today, federal prosecutors are going head-to-head with Trump's lawyers in an Atlanta courtroom. They're appealing the appointment of an outside special master to review Trump's claims that those documents are covered by legal protections. Americans are being urged to update their COVID and flu shots before winter comes. Dr. Anthony Fauci, in what will likely be his final news conference before retiring next month, says the new bivalent vaccine provides superior protection.
My message, and my final message, maybe the final message I give you from this podium, is that please, for your own safety, for that of your family, get your updated COVID-19 shot.
Fauci spent 50 years in public service. President Biden says his administration will extend the pandemic-era pause in student loan repayments through June 30th. That's while the courts hear legal challenges to his debt forgiveness plan. At the World Cup, Saudi Arabia surprised Argentina and won by a score of 2-1. Mexico and Poland ended in a scoreless draw. So did Denmark and Tunisia. France defeated Australia 4-1. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. You are listening and watching Bloomberg Business Week on this Tuesday. Carol Masser along with Tim Stenovic, and a few earnings that came out after the closing bell. We had Nordstrom come out. Third quarter adjusted EPS, 7 cents better than forecast. Revenues were slightly better than forecast, and it also came out in terms of the outlook, and it says it's on pace to achieve 2022 revenue adjusted earnings outlook, and says it sees fiscal year revenue up 5 to 7%. So quick check on Nordstrom in the aftermarket. It is down, though, about 4.5%.
Yeah, the stock dropping after, but, spiking initially, Carol. And, we can't read too much into an immediate move before a conference call comes out. But like you mentioned, the company out with earnings. We're seeing other companies report earnings as well. What else do you have your eye on?
Well, and I just want to say that some of it looks like the reaction in Nordstrom shares here in the aftermarket sinking in late trading after reporting a decrease in profitability amid higher discounting. So this is something we will watch when it comes to the retail sector.
I do want to go to the commentary from Eric Nordstrom, CEO of the company. He said, quote, "When customer demand decelerated in late June, we took action to align inventory and expenses with the changing trends, which has prepared us to navigate the current macroeconomic environment. This quarter, our teams continue to advance our closer to you strategy and supply chain capabilities as we focus on initiatives to drive profitable growth and achieve our long-term strategic and financial goals." Interesting to hear that demand decelerated in late June.
Yeah, that is kind of interesting. Yeah, and they play into a higher end, I would say, when it comes to the retail market. Hey, HP also out with their results, planning 4,000 to 6,000 job cuts by the end of fiscal 2025. They gave some of a forecast for the first quarter, adjusted EPS of 70 to 80 cents. The estimate that's out there is 86 cents a share. So again, another big tech firm talking about cutting jobs. If I look at HP shares here in the after hours, they're actually up about 1%. And investors might say, hey, you're getting control on costs, and that can potentially bode well.
Yeah, the company also saying a forecast assuming a 10% decline in computer sales. That's according to the CEO, who said that to Bloomberg News in an interview.
Yeah, that PC demand, right, still down. All right, this is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story and a headline from the Bloomberg Professional Service. Sam Bankman-Fried is apologizing to FTX employees. This according to CoinDesk. Kathy Wood says it is shocking how many people were fooled by Sam Bankman-Fried and FTX.
This is fraud. This is Madoff. Madoff was $64 billion in claims. Again, FTX, 5 to 10 billion.
Wood is the founder of ARK Investment Management. She was interviewed right here on Bloomberg Business Week. She also told us she likes what Elon Musk is doing with Twitter. HP Inc. eliminating as many as 6,000 jobs over 3 years. That word came as it reported earnings. After hours, HP Inc. up by 1.4%. Nordstrom lower after reporting a decrease in profitability amid higher discounts. Nordstrom down by almost 5%. Manchester United says it will start a process to explore strategic alternatives for the football club. It says its board will consider all options, including new investments, a sale, or other transactions. Stocks higher. S&P closing at session highs and above 4,000, up 53, up 1.4%. The Dow up 397, up 1.2%. Nasdaq up 150, up 1.4%. 10-year yield 3.75%. Spot gold little changed, up $2 the ounce to $17.40. Bitcoin today up 3.3%, 16,147. Crude up 1.4%, 81.16 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So you all might recall we recently talked with the president of L'Oreal Paris USA, Ali Goldstein, about Women of Worth. It's the company's annual honoring of women who are committed to improving the lives and worlds of vulnerable communities. And these women are recognized and then given a major assist in their mission thanks to L'Oreal, and that is in terms of support and helping them and also financially.
Well, we got one of those women with us this afternoon. Susan Burton is the founder of A New Way of Life. She joins us this afternoon on Zoom from Los Angeles. You can follow her on Twitter at Susan Burton LA. Susan, good to have you with us. How are you?
I am good. It's great to be here.
Well, it's really great to have you. I got to tell you, you have just such an incredible story. Can you share with our audience how you got to where you are today and what you went through?
Yeah, so I went through a lot, but ultimately I was incarcerated, and after incarceration, I really, really struggled to get back, to get on my feet, not back on my feet, but to get on my feet. And I failed miserably over and over again and would land back in prison, and then someone helped me. And when they helped me, I was able to sort of pick up my bed and walk. And I thought about all the other women coming home from prison like me, and what would they do? So I started A New Way of Life Reentry Project back in 1998. In my home, I would welcome women from prison, and we created a community of women helping women, and we recovered. It just is amazing what can happen when someone helps another person.
Well, take us back, because as you said, Susan, you were dealing with the prison system for a long time. I mean, what was it like when you first came out and just what you were faced with?
Oh my God, it was so daunting. I was released, put on a bus, given $200, dropped off, driven on the bus to downtown LA, the Greyhound bus station, which is downtown LA Skid Row. It's probably the biggest skid row in the country. You have no ID, you have no, basically nowhere to go, nowhere that's healthy to go. And, you want to do the best. You want to be your best, but you're just ill-equipped. So I failed miserably over and over again until someone helped me. You can just imagine the anxiety of not being equipped, but the excitement and the hope also at the same time, just whirling around in your mind and your body. And it's something that we need to look at as a country.
And then we wonder why people either land back in prison, to be quite honest with you, right? If you're not necessarily given the skills, the tools, whatever.
What are those tools and skills, Susan? What were you provided? What was that turning point when you were provided? What were you provided with?
I was provided with a safe environment that was drug and alcohol free. It was a rehab. I was provided with clothing. I was provided with social services. I got therapy. I was introduced to AA. I'm 25 years sober last month. I was given just opportunity. I was given opportunity to go to a workforce development site. I was given community, but most of all, I was safe, and I was in a place that welcomed me.
So, it's funny. I think about, not funny, actually. As we continue to, Susan, look at our prison systems, right? And, we all are like, oh, I can't believe, why is it that recidivism, right? Like, this happens so often, people find their way back. But many would argue that the current prison system and what we do in terms of reform, quote unquote, why it doesn't actually reform individuals. What's been your experience in working with a new way of life and helping people? What happens to those people that just come out and have assistance and a hand in kind of getting back to a normal life?
It's just a real game changer for them. We have over a 90% success rate, and what we provide is basic housing, family reunification services, job readiness. We help people go back to school. We help them get their children back. We allow them the space to be safe and also to begin the journey of healing. And we're talking about women here. We're talking about women who have really been given opportunity. Many times we say, oh, let's give them a second chance. But when I sit down and talk with the women and talk about their childhood and their experience as teenagers and as a young woman, a new way of life is their first chance.
It's so clear that something is missing from the criminal justice system here in the United States, that we even need an organization like yours, Susan, and we know we need it. I'm wondering, in the years since you started A New Way of Life back in 1998, to what extent you've actually been able to engage with decision makers in this country, those who would be able to make decisions to provide services like yours when women are released from prison, so they don't find themselves in a situation like you found yourself in.
This is where change needs to happen, is with policy and laws. So I engage. I engage robustly. I engage deeply. They know Miss Burton.
I love that. So tell us.
They know Miss Burton, and they enjoy, I believe, engaging with me because they know what I do is effective.
Well, and you have an understanding, right, that like none other. Hey, tell us, just got 30 seconds here very quickly, L'Oreal, what can you do with the raised visibility in their platform, and what would you like to do going forward? And just very quickly, if you could.
Yes, the resources that we get from L'Oreal will help. From the resources we get from L'Oreal Paris will help to raise the visibility, and it would also help me help the women that come home.
Right.
And I just have to say, with L'Oreal, when I got the announcement that I was one of the women, I was so excited. So L'Oreal Paris, thank you. And thank you, Bloomberg Radio.
Oh, you're very kind. Susan Burton, founder, A New Way of Life, joining us via Zoom from LA. Women of Worth, L'Oreal Paris USA, their program really about giving back. We did it. Tuesday's
We did
done.
it. Happy Thanksgiving, Carol.
Happy Thanksgiving. You're going to hit the road.
I'm going to hit
safe
the road.
Trip. And you can listen to the Kathy Wood podcast maybe while you're traveling. It's
world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, FTX's attorney says substantial amounts of its assets have either been stolen or are missing. Today's bankruptcy hearing sheds light on FTX Group's current priorities after mishandling funds.
And crypto contagion worsens with Genesis warning of possible bankruptcy. Now, Binance CEO CZ, who's positioning himself as the savior of crypto, he's turned to the Middle East for cash for a crypto recovery fund.
And Zoom's chief financial officer joins us to explain its slowest quarterly sales growth on record and plans to navigate the economic headwinds. But first, Ed, let's check in on these markets because actually we pushed higher. Now remember, this is a holiday-shortened week. This means volumes are thin and they're down about 20% from your average. But the S&P 500 managed to climb back to the highest level since mid-September. We thank in large part Apple, Microsoft, some of your big tech heavyweights, which pushed these overall indexes higher. NASDAQ at 1.4, so too is the NASDAQ 100. Let's flip it on, though, because there was a little bit of optimism in the air when it comes to crypto, too. But actually, is this more a story of dollar weakness than, of course, crypto strength? Over the last 2 trading days, we know it's been under pressure, but look at this push higher a little bit. At one point, trading up above $16,000 when we're looking at Bitcoin, Ed.
Yeah, some big news in the last hour, Caro. HP Inc. will cut up to 6,000 jobs over the next 3 years, representing a slowdown in demand for personal computers. That as its earnings disappoint. The stock actually higher now in after hours. It kind of been all over the place, but a big story we'll continue to monitor. Earnings continues to be a big story, right? Look at some of the movers, specific stocks we've been watching throughout the session. Analog Devices, a bullish forecast, $3.15 billion for the next 3 months. That's setting it apart from the rest of the chip industry. It's weathering the storm in that sense. Zoom, slowest quarter of growth on record. We will talk to the CFO about that. China, another big story. I've been looking at the US listed shares of Chinese tech stocks. Baidu outperforming. Cost cuts seeming to do well. Surprise revenue growth for internet giant Baidu. And then the other story we're watching, JD.com, cutting manager salaries by 10 to 20%, then sort of dispersing that money amongst the greater workforce, kind of aligning itself with Xi's Common Prosperity Initiative. Really interesting story on the Bloomberg terminal, and something's changing out there when it comes to China tech.
Yeah, really great global perspective. But let's